Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is August 8th, 2022. And I'm here to tell you that this pump is far from over. It's very likely, nobody has a crystal ball, or at least I don't. I'm going to speak for myself. I do not have a crystal ball. But in reading the charts, everything is telling me that this pump is far from over, and we can expect a lot more upside from Bitcoin, from Ethereum, and the rest of the cryptocurrency markets. If that interests you, then watch until the very end. I'm getting started on the 4-hourly time frame, and I want to show my larger plan. If you're subscribed to this channel, you'll know already what it is. All right. Basically, I have us in an impulsive move. Okay. That impulsive move I have hidden right here. I'm going to have it shown. Here we go. It is a 5-wave Elliott impulse, right? And right now we're in wave 2. We just started wave 3. Okay. So wave 2 would kind of be bottomed here. Wave 2 respects the 618 Fibonacci retracement of wave 1. And thus far, it's okay. So far, so good. We're heading up and out of this resistance band, okay? And this resistance band has served as resistance once, twice, and now a third time, I believe, is when we will finally breach this resistance. And at this point, once we breach this resistance, between 24 and 25K, we get to the 25K region, I do anticipate a quote-unquote God candle, one of those daily candles that's like ridiculous and it just pumps all day. That is what I expect, right? For a few reasons. One, we've consolidated quite a long time down here, right? It's been quite like 50 some odd days of consolidation, right under this resistance. And there's a lot of buy orders, a lot of short orders, okay? There's a lot of people participating in this. So there's a lot of fuel to the fire. Now, the buy orders are obviously going to push the price up, and the short orders are going to do the same if the price does go up and hit their stops, hit their liquidation points. It's going to force those orders, those positions to flip long, okay? So that's what I'm seeing on the charts. I'm seeing that we're basically going to mirror this price action right here, right? Where we broke down and then we quickly went and covered this region of space, right? Between 30 and 24K. We're quickly going to do that in the opposite direction. This is what I'm seeing. All right. Now, why do I believe that? All right. Aside from my Elliott wave count, right? This is my consolidation, my AB base, right? I've already shown that before. A wave, B wave, that's my first degree, my second degree, A wave, B wave, that's my sorry. This is my first degree right here. That's my B wave. And then this is my A wave in the second degree, right? And this is my B wave in the second degree. So this is my consolidation reversal pattern, okay? That's what, so this is my count, okay? Also, you want to flip on some EMAs, some indicators, and let's turn on our 55, 144, 21, and 89, all Fibonacci numbers. Once again, you can see that on the 4-hourly time frame, on the daily time frame, on pretty much any time frame, we're above the crucial EMAs, okay? That pretty much tells you that you're going to go up when you're above important EMAs, especially that 21 exponential moving average, right? You're above important EMAs, it's likely that price continue. The trend continues. There's a lot of people that'll have you think that, oh no, it's been too long, we've been hovering here for too long, and they're getting faked out by misreading divergences. I'm going to get into that in a second, but you do not want to get into the trap of misreading a bearish divergence when it's in fact just a consolidation. All right, let's get into that. And I've fallen prey to this quite a lot in my career, right? Just, learning about divergences and looking at them and thinking, okay, I see a bullish divergence, I see a bearish divergence. They do not always play out, okay? At least on all time frames. They do on some time frames. What do I mean by that? On the daily time frame is considered a decently long time frame, right? Let's hide this again. We don't need it right now. And we can see that although the price has moved up, let's just use tops for now. This top has moved up and this top is slightly higher. You don't see much of, you kind of see maybe the same or less in the stochastic RSI. Okay, how about this? Right here, you have some movement going higher. Let's use these two tops right here. This is perfect. Okay, stay with me here. I'm going to show you what a false divergence looks like. Okay, it's not actually, I'm using this terminology. It's just understand that divergences do not always play out on all time frames. Okay, so just because it's a daily time frame and you consider the daily time frame to be long, understand what this is. This is a consolidation reversal pattern of a 450-day corrective pattern. Okay, we started an ABC flat correction that lasted 450 days. Okay, and this is the consolidation reversal of this. This 50 days of consolidation reversal is nothing, right, for that. And so if you take your price action, you see that we made a higher high here, and on price action you didn't make a higher high on the indicator, on the stochastic RSI indicator, on the momentum indicator, you're even. That would constitute bearish divergence. However, you want to be very careful in calling this bearish divergence. One, because the indicator is topped out. It is overbought. Okay, it's basically maxed out at 100 here. If it could go higher, it would. That's what it's telling you. It's basically telling you you need to jump into a higher time frame to be able to read this accurately, because right here you're pushed up in overbought territory for 1, 2, 3 consecutive weeks, probably, right? For a while now. Let's see how long this is. So this is false divergences, okay, for 25 days. Yeah, about 3 consecutive weeks. You're pushed up into that overbought territory. And that basically says, stop trying to read this on the daily time frame. Jump up. So let's go on the weekly time frame and see what it says. Okay, so basically you could read this technically as bearish divergence on the daily time frame. But on the weekly time frame, what's it look like? All right, let's get rid of our arrows. Okay, let's just keep the price action arrow. On the weekly time frame, what do you see? You see that the momentum indicator indicates that there's more room to go. Do you see how that works? So in a larger trend on smaller time frames, you can read something as being bearish or bullish or whatever, but in actuality, it's basically telling you, the momentum indicator is telling me we're topped out at this small time frame. You have to push up a time frame to get a more accurate reading of this trend. So this trend is more of a weekly trend, because you see on the weekly RSI, weekly stochastic RSI, we're still moving up, and that is, we still haven't kind of maxed out the stochastic RSI on the weekly time frame right here. So this is what you need to be watching for divergences, okay? For your stochastic RSI. This is the time frame you want to be working on. And if you're working on this indicator, you'll notice that you have some strong bullish divergence, okay? Watch this. Guys, if you're getting value, please like, share, and subscribe. I don't see anybody talking about false divergences. People talk about divergences, but they don't tell you about how to read false divergences and what to do and all that stuff. So, guys, I've accumulated a lot of this over years and a lot of mistakes, and I'm still learning. So if you guys appreciate the sharing, definitely like, share, and subscribe. Here you can see this is a high, okay? And this is our high right here, okay? Definitely price action is down, okay? That's unmistakable. between this high and this high. However, look at the momentum. The momentum's telling you that here you're actually coming up. In Bitcoin, it's not as obvious, but in some other assets, you can see that on the weekly time frame, you're about to break the high, the momentum high of this previous high here. So you're showing bullish divergence on the weekly time frame. Right now, it's not yet confirmed, but it's coming up. Maybe in a week or two, you can see confirmed bullish divergence on the weekly time frame in Bitcoin. That's what you should be looking at. This is why you need to be patient. This is why this move, so let's jump back down on the 4-hourly time frame. Okay, this is why this move right here, taking its sweet time and trying to break 30K shouldn't surprise you. It shouldn't surprise you that it's taking so long. It shouldn't surprise you that we're matriculating slowly, ever so slowly, up and through this major resistance, because this is a big deal, okay? Now, what's another reason why you shouldn't be fading this trend? People going short are very brave and also quite foolhardy, I think, in my humble opinion. Look at this right here. Let's there's something else I hid, and I put this just to save time. This is clearly an inverse head and shoulders. Okay, for those of you subscribed to the channel, for those of you kind of interested in charting, technical analysis, you'll know this pattern. It's a popular pattern. It is typically a bullish pattern. Every pattern can be bullish or bearish, right? Nothing has 100% sort of 100% track record in one or the other direction. But this is already broken out. The bullish confirmation of this bullish inverse head and shoulders is the break of this neckline. That happened yesterday when we broke 23,400. Okay, it happened at midnight, my time, Eastern Standard Time. So the break of this means that this bullish pattern is in play. If this bullish pattern is in play, the technical target for this pattern, right, which would be the height of the pattern from the point of breakout, right, neckline, would be about the top of this move, okay? So at the very least, you're expecting us to go to the top of this move. Where you should be very nervous if you're in a short position right now is this. Why you should be very nervous is that we're consolidating before hitting the technical target. You know what that means? Consolidation before hitting a technical target means continuation, right? That basically means you're gassing up, not just to meet this target, but to breach it. Because remember, our larger time frame read is that this is a third wave, right? If, let's show it again. This is a third wave. We're in the third wave. So if we're at the bottom of the third wave, you just broke out of a bullish inverse head and shoulders pattern, it's likely that you breach this very important resistance that you've been in under for 50 days. And it's very likely that you hit the top of the target, right, for wave 3 in this 30K range. Okay, this is why I think it's very, very likely for us to continue up and out for Bitcoin and Ethereum and the rest of the cryptocurrency markets. Now, a lot of people are saying, I'm crazy short on Ethereum. A lot of people are going short on Ethereum. We had a look 2 episodes ago at the Phemex open interests. The Ethereum shorts are really going up and up and up, meaning a lot of people, a lot of big money are shorting Ethereum. Why? I don't know. Because the charts are telling you the opposite. Okay, and this is, I think, a good example of trying to be smarter than the average bear. Like, the charts are telling you one thing. You've been in an uptrend for X amount of time. That uptrend hasn't broken. It hasn't even come close to breaking, right? You've never breached the 618 Fibonacci retracement of any of your uptrends. Yet and still, people are putting big money on the line, shorting this move. That is ridiculous to me. That is absolutely crazy, right? Whatever the fundamentals say, if the Ethereum merge, whatever, like this is why you do technical analysis, because that all that stuff is good and well, but the charts are telling you you're literally not just going to go to the upside. You're going to put in a very strong move to the upside. Again, you have your very bullish inverse head and shoulders pattern, and on Ethereum, in Ethereum, you broke that as well yesterday, okay? And what you're doing is you're retesting, you're breaking and retesting, you're going to continue to the upside. You just broke a very important bullish pattern, you're retesting the neckline, expect continuation, and that continuation is likely going to take you well over $2,000, okay? So shorting this move at this time, I don't know what people are thinking for that. Okay, so those are my main reasons. And again, you can see the same kind of false bullish divergence or bearish divergence in Ethereum. False, I say, because if you're looking on the daily time frame, one can say, okay, here you're making, let's see. Okay, this is a good example right here. Just to drive this home, this point home. Let's get rid of this because we've already seen it, made the point. All right, let's use these two highs right here, okay? This and this, okay? Right here. So higher high on price action, okay? And a lower high. You can say there's a lower high right here in the momentum indicator, okay? So that's your bearish divergence, okay? Thing is, that did play out in a way right here because you got that consolidation. But you see, even the bearish divergence on the daily time frame, you're consolidating and you move down, but in the aggregate, you're moving up. All this tells you is that this time frame is too small to accurately read divergences for this move. That's what it's telling you. Guys, again, you want to go into the weekly time frame. I hope you guys get that. Like, I didn't learn that until much later in my trading career. Like, how I could successfully read a bearish divergence or a bullish divergence, and technically it's accurate and everything like that. Yet the price moves against me. What gives? It's time frame specific. You have to be in the correct time frame for that trend. This trend is a larger trend than the daily time frame. Okay? And once again, if you go on your weekly time frame, you see that Ethereum has made a lower high, right, on the price action, right? So these two highs, yet you have confirmed bullish divergence here on Ethereum. See, it's absolutely mental that some people are shorting this. Look at this. Weekly time frame, these 2 points right here, lower high on price action, higher high stochastic RSI, one of the best ways to read divergences, in my opinion, using stochastic RSI. This is confirmed. Expect this trend to continue to the upside in a major way. You're likely to not just reach this high, you're likely to break that high to satisfy this bullish divergence. Does that make sense? You're likely to make the higher high right here. That's what the charts are saying, right? If you're a technical analyst and you believe in technical analysis and you use technical analysis, this is why you use it. And you ignore all the talk about merge this and merge that and blah, blah, what miners are going to do and all that stuff. You put that shit aside and you look at the charts, right? That's it for me for today. Hope this was helpful. Hope this was useful. Use this analysis for Bitcoin and Ethereum and apply it to the rest of the cryptocurrency markets because they're the leaders. And on this channel, we look at Bitcoin as a proxy for the cryptocurrency markets at large. For that reason, we do not have to go down the entire watch list to derive some conclusions, that likely conclusions as to what will occur in the rest of the market. All right, that's it for me. Hope you're well. Have a great Monday, and I'll see you guys tomorrow. Wreaking havoc on their drums. We cold, getting dumb, getting crazy style. Late night, high division, we be moving with precision. With 10 spots popping off, making some decision about hitting them one at a time with these ill rhymes. My love at the door, free drinks hitting the floor. The Zodiac.